Hey, welcome to Left Right Out. Of course, what's been in the news, Omicron variant, which is one of many variants that we've had. Like I said, was it Friday, whenever the market was like actually had a little bit of a correction. It looked like it was correcting, but then today it's just, I wouldn't call it a bounce, a dead count bounce. I mean, I'd hope, but we need an actual correction. I don't care if this is a fake market or not. You need a pullback. But it's up like 300 something points right now. You have the S&P that's up 70 points. That's almost that's a 1.5%. That's a pretty big move. Oil's regained. But here's the interesting thing, because you had that flight to the bond market. You had that flight to the 10-year, which is, the risk-free asset, supposedly, or used to be considered that. And it was under 1.5. That's pretty incredible, because it was at 1.66%. I mean, those are huge moves, huge, absolutely massive. But right now we're sitting at 152. I saw it hit 154. We're seeing astronomical moves in the bond markets, in my opinion. This is craziness. But that's what I was saying. You got to look at that, because that's going to tell you when you actually have the real move, the real big crash, and when that thing starts skyrocketing. But what I wanted to see with this variant was an actual correction, which we're not really seeing. We saw a little bit of a pullback, 2%. We needed a little bit more fear in there. Now the fear is gone for some reason. It's like, did we learn anything new about this? Not really. You see the VIX getting crushed as if there's still no fear, which I guess there isn't, because you have a POW put in a sense. The Fed is still in there. They haven't, we call it tapering, which is a very slow taper. You still have monetary expansion. Here's what you don't get. You're not going to hear from a lot of people is, okay, the Fed backs off on that. You're going to see the rise in it. It's a cascading event, but you still have money creation out there. You still, like I'm getting, I don't know, in the mail, how many credit card offers to take out lines of credit. These things are expansionary. I mean, this is what happens, because the majority of the currency that's created is in the private sector and the fractional reserve banking system. But we don't even, if you call it a fractional reserve banking system anymore, because there's no reserves really to fractionally lend out, essentially, because there is no reserve requirement. So I guess there is, in a sense, because people put their money in there, but it's all blips on a screen at this point, and they can just pretty much lend out what they want. And that has a cascading effect. It used to be like you have 5-10% reserves, and there's a multiplier effect that you can utilize to kind of see how that the money that's going to be created. So you're still having this expansion. You see home sales skyrocketing in October. So there's like a lot of contradictory things that are being signaled out there. You have horrid consumer sentiment. I think that the spending starting to slack off. You didn't have a very good Black Friday, but then at the same time you have houses going up. I mean, so that it's crazy. So you can look at that. It's like, is it contradictory? I don't think so, because I actually think the good news is bad news at this point when it comes to the overall structure of the economy. So that skyrocketing home deal is not good news. It's actually bad. But we won't get into that, because I want to keep these kind of short. But that they're papering over a lot of this with monetary policy. But anyway, so we look at this kind of stuff. That was really concerned. Look at the VIX is down like 25 or 20 something percent today. So for some reason, people are not, there is no fear in the market. There's just not fear, even though they're trying to play this new variant as some kind of fearful deal because of how many mutations it has around the spike protein. Oil is another interesting thing. Oil popped today, because it was crushed, over the lockdown scenarios that could come out of this variant. Oil is back. It popped up, but now it's kind of retreating. You're up about almost 2%, hovering around that $70 range, which, in fairness, that should hopefully result in relief at the pump coming into Christmas for people, which we all need it, because inflation is vastly underestimated. And I've gone into the past, just look at how they calculate CPI. What are the largest weighted groups of CPI calculation, and how that they calculate that is it's insane. So we are experiencing inflation like we've never experienced it in our lifetimes anyway. or when you call, like I said, I guess I got to redefine the terms price increases, because inflation is actually expansion of the monetary policy, which the last statement wasn't incorrect, because we're seeing something we've never seen in our lifetimes, but neither has anybody else in the history of mankind seen such monetary expansion. And it's always ended in the destruction of that empire of some sorts. But anyway, back to that. So we're seeing a lot of prices rising, and then what happens is you have these huge spikes, which you're going to have, and then it crashes, and they're going to, anyway, we're past the point of transitory. This thing is cascading. It becomes a thermal type runaway until it gets to a point where it actually crashes. And that's why, and because in reality, a real market, if you had a real market and real monetary policy, these malinvestments would be liquidated sooner rather than later. But in fact, since we're papering over it, we are opting for later, so that there's more and more of this buildup of companies, investments that should not be happening, that this capital should go elsewhere. It should be utilized more economically. The definition of economics, pretty much the most efficient allocation of capital. It's not good doing that, so you're incentivizing it to go different places, and eventually when that actually corrects, then it hurts a lot of people because they have been driven into these things. And it is insanity. So we look at the crypto market. The crypto market, Bitcoin is actually rallying, which is, to me, is odd. All right, I'm looking at Bitcoin as a counter trend. If it's supposed to replace gold, I like crypto, but it seems odd to me that you have gold, it's flat today, but it's a little bit down, like 0.1%, which you'd want. If there's no fear in the market, there's no worry about inflation, which nobody cares. Everybody thinks they're tapering, so you'd expect gold to be flat, maybe a little bit up, maybe a little bit down. Silver, but you would expect also the cryptocurrencies to kind of have a correlation with gold, but that correlation is broke right now, and you have Bitcoin rallying with the market. Now, I don't know what that exactly means right now. I mean, because you have to let other indicators unfold. But I look at Bitcoin, or I was looking at these other things as possible hedges against inflation because of its finite quality, just like you would say a gold would be, and silver. But it's not. So what I am espousing now is that now that we have such a manipulated market, we look at the manipulators in which way they want to direct things, and you look at the psychology, and that's how you got to determine moves, because things have detached from traditional finance and economics to the point where there are these relationships that we're so used to being able to compare, they just don't work anymore. But there is a train of thought that has taught us that what happens when this happens, and that's the Austrian school of thought. But anyway, I'm going to leave it there. Talk to you later, and peace.